Hi there, I'm Kendra Friedland, the founder of Money Mind Financial Coaching, the coaching program that allows freelancers and solopreneurs to take the reins of their financial dreams and build the lives that they're looking for. Today, I'll be discussing financial matters that relate to individuals as well as companies. Let's begin. So first of all, we're going to look at things from a macro view. You need to know what you want and how you're going to get there. So you are going to decide what job, what business, what income you're going to generate to fund your richer lifestyle and leave a deeper impact in the world behind you. You might need to diversify your income streams. You might want to keep your job and have a side hustle, or open a company on the side as well as keep your day job. Invest in various portfolios and get passive income stream going. So this is where you decide how your income is going to be generated. You also need to know what your goalposts are. So let's say you decide that 70,000 is a comfortable monthly income. You need to take that number and times it by 300. Any number that you decide on, times it by 300. In this case, it'll give you 21 million. That means you need 21 million rands, dollars, pounds worth of assets that will give you 70,000 a month based on a 4% drawdown. So if you do the maths, you take the 21 million times by 4% gives you 840,000 divided by 12, then gives you the 70,000, bearing in mind that this is before tax. And finally, you need to know what is your break-even point. What is the income that you need to cover your expenses so that you are perfectly fine? It's the minimum income you need that will cover your expenses. And that is your break-even point. This is for you as an individual as well as a business. Now we're moving on to our next circle. This is our wealth accumulation circle. As you can see, this also gives you your richer lifestyle, and it also works towards giving you complete freedom. Now, in order to accumulate your wealth, you are going to need to have the right wealth education, the right resources in place, and of course, the right advisors, being accountants, tax, legal, and coaches, business or financial coaches. You'll want to have the right accounts. So what are your shares? What are your bank accounts, etc.? As stated, when it comes to your shares, you're going to want a portfolio, and you'll want to diversify the kind of investments that you invest in. So what your asset classes, be it property, shares, etc. And location. You don't want all your eggs in one basket. So will they be in different markets? And spread the wealth, spread the risk. And finally, you want to have hands-off automation, because you want your money to be put into your wealth-generating assets on a monthly basis without you even thinking about it. Because if you have to think about it, you might forget about it. And then what is the point? You want your money to be working for you and having that compounding, working on a monthly basis, on an annual basis, year on year, growing your wealth so that when you retire or when you decide that this is the figure that you've reached, you are sitting on a very pretty penny. So something to think about is when it comes to a financial advisor, it is more cost effective to have an hourly consultation with them and pay them for that particular amount of time where they give you advice than by signing up and having them take a percentage of the money that they make while investing for you. Because if you do really, really well, that percentage could turn out to be a substantial amount of money compared to an hour's consultation where they just give you the advice of where to invest your money. I have put in a set of questions that you can ask a person when deciding if they will be a good fit for you as your financial advisor. And you'll find that in the bonus section at the end of this presentation. So this is when you look at the two together. Your income generator is going to feed your wealth accumulation. And if your income generator breaks down, you're going to be pulling on your wealth to fund your lifestyle. So these two are interlinked. And now you want to have your insulated circle, which is your protection circle. And what does this protection consist of? It's your insurance policies, be that short-term insurance, life insurance, all those kind of things. It'll protect your income going forward if something should happen to you. You would also want to eliminate your consumer debt. The debt that you would like to have is debt that will help fund your assets rather than just be wasteful in the form of groceries, etc., put on credit cards. And lastly, it's your armor protection. Here you have your copyrights for your intellectual property, your trusts for your assets, your companies for your business, and your will so that you can decide how things are going to happen and what your beneficiaries will receive. And finally, tax protection so that you can plan your estate duty and decide how best to keep the money in your pocket and not give it all the way to the government. So now you want to look at how these three integrate. Your income funds your assets, and you have your protection in place. So if your income dries up, you've got your insurance policies like your income protector insurance that will then feed this until you are ready to get back onto your feet, and that won't drain your wealth. Because if you didn't have this, your wealth would then have to move back into this section in order to fund your daily expenses, until such time as you've generated the wealth that's just going to work nicely for you. But if you haven't got that, you're going to be pulling these in the wrong direction and you're going to be going backwards. So that's why you want to have all three of these working together so that you are working towards the goal of your complete financial freedom. Now on a micro view. Your income statement is basically your income generator. This is where you have your income, less your expenses, will give you your net profit, which ultimately goes to your owners. So it moves into your balance sheet. Your balance sheet is a picture at any given point in time on a day that says, what are your assets if you take your owner's equity plus your liabilities? Or what is owed to the owners if you have your assets minus your liabilities? Or okay, you can look at, what do I owe if I take my assets minus my owner's equity? So these will always work together, and this is what you'll find in your balance sheet. And it's called a balance sheet because the side has to balance. It's a scale. If it doesn't balance, your balance sheet is not working. Now, you're going to have the income that's coming across to your balance sheet forms your operating cash flow. There are items that come into your income statement that you might have to remove when working out your operating cash flow. And those are things like depreciation and any accruals where you haven't actually had the money come into your account or left your bank account yet. You will also take into account the fact your movement in your debtors and your creditors and your inventory, because that's going to be tied up into how your operating cash flow works. If you think about it, if you are only getting paid in 120 days, you are going to have to find the money to continue paying your expenses because your income is only coming in so much later. So those are the things that you have to think about when dealing with cash flow. The other sides of your cash flow statement are your investing and financing activities, which will be found basically in the balance sheet. You'll be looking at your assets and seeing what are the investments that you've made and what are the movements in those investments, as well as what liabilities you have raised in the form of long-term liabilities in installment sales agreements and mortgages, and what are the movements in those balances that would affect your bank account. So finally, we have our last circle being our protection circle. Again, there's short-term insurance being your, if you've got fire or theft. Key man insurance is if you have more than one party who is a shareholder in your business. Should something happen to them, you have the money to buy out their shares so that you can have a person that understands the business coming in rather than somebody inheriting shares and then coming in and calling the shots when they don't know what they're doing. Income protection, again, if you are injured, you might get money from an income protection insurance, and you can also have insurance in case there are any legal ramifications that you have to deal with. Other protection is you would like to have your bank accounts separate for sole traders or for businesses. You need to have separate bank accounts so that things are clear cut and it's easy for your accounting records to deal with business expenses, business income, rather than muddying the waters with personal expenses and income. You will want to know your company tax law and your employee tax law. So you'll want to know when you take on an employee, will you have to pay skills development levies, UIF? Will there be union fees in place that come into effect depending on what sort of industry you're in? What sort of sales taxes in your country? Do you have GST? Do you have VAT? When do these laws take effect? Do you have to earn a specific amount of money before you have to pay? Or is it depending on what you're selling? You need to know all these laws, because if, as I said, if you don't know what you're doing, it doesn't matter. The receiver of revenue doesn't care. Ignorance is not a protection from the receiver of revenue. It never has been, never will be. So that has brought us to the end of my slides. I would like to thank you so much for joining me today. I have included 3 links. The first link is to my Money Mind membership. So if you feel the need to brush up your financial literacy, you can join me on a monthly basis. Every second Wednesday, we have a membership meeting where we discuss various financial literacy items. And if you feel that that is not quite enough and you'd like to delve deeper into your business, you can set up a Money Mind business discovery session with me. It consists of 2 hours of 1 hour each, where we discuss your goals and your needs, and then put a plan in place that can help get you to where you want to be in your business. And finally, there's the Money Mind bonus. So I alluded to the fact that there were questions about how to find your financial advisor, and there are a couple of extra bonuses in that folder too that you can find. So thank you so very, very much for joining me, and I hope you have a lovely day further. Have a great one. Cheers. Bye.